Hi everyone, you were asking for more options trading videos and I released one last week on my paper trading account, and then someone asked for more Questrade options trading videos. Even though I pulled out most of my funds from Questrade, I am going to try to do a tax-free savings account covered call option strategy. I've been doing this for around 13 years on Apple shares. I've done it in a few different brokerages, but I'm going to show you how to do it on Questrade. So right now I have 100 Apple shares. I've had, I think, 1,000 Apple shares total in various accounts. What I'm going to do is just show you how to do it just for beginners and then my thought process. One thing about selling covered calls in your tax-free savings account, everyone thinks it's going to be taxable. However, if you do 30-day to expiration, it's treated like a dividend. It's not considered running a business. It won't turn your TFSA taxable. I'm doing 30 to 45 days, kind of the tasty trade way. So it's kind of like a dividend because dividends sometimes pay monthly. If you do weekly or bi-weekly trading, it might be considered too frequent and you won't be, I don't know, you might risk losing your account and making it taxable. So I just do 30 days. I've been doing it for 13 years and it's fine so far. I grew my account to around 550,000, which I've switched out of Questrade because they stopped paying me. I'm going to leave a link for Interactive Brokers where you can create a paper trading account and you get lower fees. So if you click on that Interactive Brokers link, I will get some affiliate marketing. You don't have to sign up, just click the link and it helps out. So what we're going to do is search Apple. We are going to select our time to expiration. So I'm not here in August and like middle of September. So I don't want to manage it while I'm on vacation. What I'm going to do is select September 19th. I will be back around that time. And I'm going to choose a few more strikes. What I like to do is sell around the 20 or 25 delta. What that means is, so 25 delta, you think of the inverse, it's 75% chance of profit. If I choose 80% chance of profit, that'll be 20 delta. And you can play around with it right here. You can kind of add what you want to see. I don't deal with gamma too much, but see here the delta. So this is 50-50 if you sell at the money. So I chose September 19th. The further out you go, the more money you'll make. But also you have to choose like a happy medium for what you think is appropriate. So right now, if I think 18 delta, that's probably too low. I'm only making $200. If I go 230, even though earnings is coming up and it's 45 days away, does it say the date expiration? 56 days expiration. It's kind of too far, right? Right now, it's kind of mid-July. Do I want to go a little closer? So I'm not going to be able to manage it. So I am going 56 days, which kind of breaks what I said initially, 30 to 45, but I won't be around to manage it. I will be traveling. So what I'm going to do is sell, let's say closer to the money, 230, around the 25 delta, so 75% chance of profit. If it gets close to this, I'll buy the option back at a loss and sell a new one and continue doing that. I've been doing around $150 to $200 every month for 13 years. I've had a few months of losses, but it doesn't wipe out too much. So what you can do, you can click on one of these to like open it up. I already have it queued up on the right. Make sure you're in the right account. I'm just choosing market for now. Right now, if we do 230, hopefully I'll find. Let's take a look. So I bought it for $7,000. And I'm making, why did I do that? And I'm making, let's say 310 divided by 7,000. So that's 4% for 2 months or 2.2% per month. Let's say times 0.5 times 100 times 100. That's 2.2%, which is not bad. If I do this every month, I should be at over 20%, which I have been doing for a few years now. If we think of the return, 310 on my on my total market value, because that's how much I have tied up. So I think it was $21,000. It's not as good, right? Times 0.5. So I'm making less than 1% on my total ownership of this. So if we go here, $21,000, could I make more than 300 a month doing something else? It's probably not the best decision. I could probably use this 21,000 for something else, but I've been doing this for so long. Apple is relatively slow moving. It's just like my bread and butter, just the covered calls. And there's nothing much I could do on my TFSA, which is more speculative. So I'm kind of going safer now. I do have the S&P 500 and VFV in my TFSA and other accounts. What I'm going to do is line it up, click sell. The commissions have dropped to $1, which is good. They're trying to get people back because everyone was leaving because they got too expensive. But they started charging in other ways, which I'm not happy about. So I'm going to go here. What I do like, you can group by strategy. You can take a look. You can see your theta here, and you can see the option change in value or price as you go. So I'm up $14,000 just on these 100 shares. But it doesn't sound like a lot over 13 years, so 1,000 a year. But I've been making 150 to 200 every month for the last 13 years. If you go back to my first videos in 2020 or 2021, I was doing the same thing on Apple shares in my TFSA. So I'm doing this for a really long time, and I have proof of it. If you want to play around, go Interactive Brokerage, you get a paper trading account. If you want to see how this looks in terms of charts and graphs, you can go to OptionsStrat.com. You can build a covered call strategy. You can type in how much you're buying the shares at, 100 shares. You can check the where you want the call to be. So you see here, you can change how this looks if you're a more visual learner. So max chance of profit, I get an additional 2,200 if the shares go up. Because they're currently trading at 214. So not only would I get the 315, but I'd get the variance from 214 to 230, which is around $16. So I think this needs to change to that. So I'd get another $1,800, which is not bad. Max loss is $21,000. This could go to zero if my Apple shares go to zero, which I don't think it would. I think we'd have other problems if it does go to zero. That's it for this video, just selling a covered call. This is probably the safest thing you can do in your tax-free savings account, other than maybe buying the S&P 500. But I do like trading options because Apple's dividends are very low. Let's just take a look at Apple stock. The dividends are 0.49%. So I'm not counting on the dividends every year. I sell covered call options just to give myself an additional income and additional gain on these Apple shares that I'm probably going to hold for life. Hopefully nothing goes wrong. Thanks for watching. Let me know if you have any questions. Please click the link for the Interactive Brokers and tune into the next one.